Hey everybody, welcome back to the What the Wealthy Do podcast, where we pull the curtain back on how the wealthy build their wealth and show you how to apply those strategies to your daily life while you're on your wealth building journey. I am your host, Stephanie Dorsey. I am the CEO and co-founder of Margins Capital. Margins Capital is an investment firm that's focused on providing women and people of color access to an institutional quality portfolio of alternative investments. Today's episode is going to focus on closing out the year, because I'm telling you, how you close the year is absolutely tied to how well you start the year. So while many people are checking out, looking towards their vacation, they are spending like it's going out of style with abandon. I assure you that the wealthy are not doing that. They're using November and part of December to tighten up, tally up, and then take off. So today's episode, we're just going to go through what they do and show you how you can apply some of those same strategies to your life. But before we get started, I want to remind you that this podcast is not intended to give financial advice. It is only intended to give financial education. So let's get started. Thing one. So before the wealthy do anything, they review how the year went. And I'm not just talking about scrolling through their Instagram or camera roll to see how their vacations went. They want to see, how did their investments go? They take a true audit of their assets, liabilities, and how they met their goals. So they ask, how did my portfolio perform this year? What did I build or acquire that adds to my net worth? Where did I overspend or underperform? And what's the return on the time and energy that I invested this year? For them, it is not just about numbers, it's also about alignment. And we've talked about this in previous episodes. Yeah, I want a return on all of my stuff, right? They want a return on their money, they want a return on their time, and they want a return on their joy or energy. Because wealthy people know that what gets measured gets managed. And so we have to look at all of these things and not just assume that whatever we invest in is going to return time and joy. Obviously, it's easier to manage return on money, right? It's quantitative, but the qualitative stuff matters too. So what I want you to do is look at everything. I want you to look at the bank statements, some credit card statements. I want you to look at your brokerage account statements as well. But I want you to take stock of the things that you spent your time on and evaluate whether or not it gave the type of returns that you thought it would. The second thing the wealthy do is they want to optimize for taxes. They want to make sure that they are taking advantage of the tax code to the fullest extent possible, because it's not how much you make. I mean, it is a little bit how much you make, but equally important is how much you keep, how much you avoid just giving to Uncle Sam willy-nilly. And so while most people are out here buying gifts, they're out here buying deductions. I want us to shift the way we think about money and taxes. A lot of us think, okay, the tax man is going to take our money and we just have to give it to him. But what happens if instead you think about, okay, I have this money, so I can just give it to Uncle Sam and not get any pleasure from it? Or I can spend this money on something that I get pleasure from and I get the benefit of in lieu of giving it to Uncle Sam, right? So they look for ways of, how can I reduce the amount of money, or how can I get the benefit of this money instead of just giving it to Uncle Sam? So you can do that in a lot of different ways. You can do that by maximizing your charitable contributions. You can do that by maximizing your 401k, HSA, IRA, all of those different types of contributions as well. You can prepay business expenses. It's like, I know that I'm going to need this new machine for my business next year, so let me go ahead and just buy that machine this year because I already know we made a lot of money, and so I need to bring my tax liability down. Or perhaps they invest in a different type of asset because, again, they know how well they did this year. The IRS don't yet. So they're like, okay, I've done really well. I need to figure out a way to spend this money so that I get the benefit from it, or my business gets the benefit from it, and it's not just freely handing it over to IRS. So instead of, they're thinking long term, they're not just thinking about saving money, they're thinking about shifting money. And I want you to think about your money like that too, because isn't it better that it stays with you than it goes to this administration? Can't you do more with this money than perhaps the government can? And so I think another misconception we have is that we need to have millions of dollars in order to move our money and manage our money like the wealthy do, and we don't. I mean, even small moves can have massive impacts on what we decide to do with our money. For instance, there are 3 tax strategies that, assuming it applies to you, could be useful and meaningful in mitigating your tax liability. The first one is tax loss harvesting. So what tax loss harvesting is leveraging some of the losses that you've accumulated from your investments to write off on your taxes. A good example of this for me was I had invested in crypto back in 2021. I experienced a crypto winter in 2022, and the value of my portfolio dropped from $10,000 to $3,000. And I could have, I did not, because I did not know the game. I know it now, and I'm trying to make sure that you don't make the same mistake I made, but I could have written off those $7,000 of losses on my tax income. Now, mind you, that year I would have been able to write off like $3,000, and I would have been able to carry over another $3,000 to the following year. But think about that. That is a loss, or that would have reduced my tax liability, and I would have been able to save $3,000 that year. Another thing you could do is leverage a donor advised fund. Now, donor advised funds are particularly useful if you get a windfall of money and you put a nice chunk of change in a donor advised fund. Say if you get $15,000 or $25,000 that you're like, okay, I need to figure out what to do with this, and philanthropy is important to you, what you could do is put that $15,000 or $25,000 in a donor advised fund. When you do your taxes next year for 2025, you get to write off that entire $25,000 or $15,000, even if you don't distribute that contribution to whichever charitable organization all in 2025. So let me say that again. You can put $15,000 in a donor advised fund today, but you can give out $5,000 in 2026, $5,000 in 2027, and $5,000 in 2028. But when you do your taxes next year for 2025, you get to write off, you get to deduct that entire $15,000 contribution. So we like a good donor advised fund. So in order to do itemized deduction as a single person, the standard deduction is $14,600 for 2025. So that means in order to itemize, your deductions need to exceed $14,600. Otherwise, you'll just get the standard deduction that they will reduce from your taxes. If you're married, that standard deduction limit is $29,200. So to be clear, you want to time your investment in a donor advised fund to make sure it is above the standard deduction limit of $14,600 for a single person or $29,200 for a married couple. And then lastly, if you have a small business or a side hustle, you can take advantage of things like the Augusta rule, which allows you to rent your home at market rate for a qualifying business expense. So that could be you did meetings or office space, or you recorded content, because a lot of us record content in our homes, things like that, and you get to pay yourself the market rate for renting your house for those expenses for up to 14 days. And so that is something that you get to do, and you get to write off on your taxes as an expense for your business. So these are just different things that you could start to think of today that might apply to you. And today you might not yet be the millionaire that you're aspiring to be, but these are things that you could do. The third thing that the wealthy do is they start to rebalance their portfolio, right? They look at how is the market performing, and they look at whether or not my money is sitting in a stock or ETF that's underperforming compared to somewhere else. And so this is a time for you to start to look at your 401ks, your brokerage accounts, accounts, anywhere that you have investments, to make sure that they are performing in the way that's optimal. And if not, then you can start to rebalance and shift some things around to make sure your money is working the hardest for you. And let's be clear, rebalancing is not just about money. It can also apply to energy, like this work relationship working out. Is this personal relationship working out? Is this obligation that I signed up for, is it getting me where I want to be? Am I accomplishing what I want to accomplish? Or is it draining me of joy and my time? And so there's an opportunity, I think, at this time of year for you to just get quiet and get still and do that introspection to make sure that every investment you're making, be it your time, your mind share, or your money, is serving you. Is it giving you more money, time, or giving you more joy? And if it's not, it's time to move on, and it's all right. Move on. Let's rebalance. And then lastly, while a lot of people are checking out and they're like over it, or we're working double time for our 9-to-5 job, the wealthy are spending time setting up things for January before they clock out for the end of the year. So they're setting up meetings with their CPAs or lawyers or private wealth managers, and they're establishing their budgets. They're doing all of these things and having it set up so when January 5th hit, they're ready to hit the ground rolling. They already have meetings set up on people's schedule. And I'll tell you this, I remember talking to my lawyer and talking to other people. A lot of them have slow January. So you can get ahead of the craziness by just scheduling your meeting to meet with these people now before you go out on vacation. So just know that momentum compounds. That's financial momentum and mental momentum. And so you will already be ahead of the curve come January 5th, and other people will just be getting started. Literally these little wins that will set you apart from the 99%. So I want to take this time to talk a little bit about a strategy that I've been doing for years now that I think is very helpful, and I'm going to share it with you. It basically is a practical approach to all the things that we've been discussing in this episode. And I want to start by saying that women, especially Black women, we are often looking at opportunities for improvement. And we always start with our opportunities. And I like to flip that on its head. And so the first thing I want you to do is write down all of your wins, all of them. And that could be big and small. It could be professional and personal. It could be financial and or qualitative. And so, for instance, I would write down that I really wanted to invest in AI, and Margins got a chance to invest in Perplexity, which is one of the companies we said we wanted to invest in, as well as Anthropic. And Anthropic is up, and it's like, yay, we did that. But even personally, I learned how to sell. For my entire life, I was really intimidated by selling, but one of our portfolio companies required me to learn. Somebody was gonna have to do it, right? And I had to leave from out front. And so now I found my way of selling that's comfortable for me, and I can do it, and it's great. And that's a win. It's an example of a qualitative win. Then the second thing I do is I realize, because the art of the reframe is important, so I don't even think of it as failure. I think of it, I either win or I learn. So every time something doesn't go as I expected it or wanted it to go or hoped it would go, it is a learning. And so I write down all the things that I've learned this year. An example for me is I learned that I'm not great at marketing. So after I fired my marketing agency for our portfolio company, I ran marketing for 4 months and I did not do a great job. We did not win. We lost money and the business contracted. But you want to know what's a good thing that I did do? I stopped the bleeding. Yes, I did. After 4 months, I was like, oh no, I'm not good at this. And I hired help. So again, I don't think the learning is in languishing on the opportunity. It's really just identifying like, okay, what did I learn this year? And valuing that learning. Because in that reframe, you get a lot more growth, right? Because if I just like, oh, I failed, I was terrible at marketing, whatever. And I frame it like that, I was so bad at marketing, I'm not good at marketing. What's the learning in that? The learning is I realized I can be a force multiplier in other parts of my business. But if you only just say, oh, I'm bad at this, it's hard to make the second step, figure out what that so what is. So again, ain't nobody got time for us to just be beating ourselves up. There's no growth in that. There's no opportunity. There's no learning in that. So you just identify, okay, what are some of the things that I learned about about myself. And if you want, you can start with like what did not go so well. And then you will identify the so what in that. And that is how you get to step number 3, which is figuring out, all right, this is what I did well. This is what I learned this year. What do I want to accomplish next year? How do I build on those 2 pillars for next year so that, again, you're trying to be a force multiplier. This could be in your personal life. This could be in your relationship as a parent, as a daughter, as a sister, as a brother. It could be any of your personal relationships, or it could be in your businesses, or it could be in your investments. But these 3 things, I just find they have set me up to accomplish so much more. And you're literally going to be in the 1% here, because that's really what we're trying to be, right? The beauty about this day and age is that it's getting a little easier to get in the 1%, right? And so these 3 things will help you get there. Also, the last thing I want to say with these 3 things, the value, the true value is in writing them down. There's research that shows that when you write down something that you're trying to accomplish, specifically a goal or something, you are 42% more likely to accomplish that goal if you write it down. So I want you to write down what went well, what did I learn, and what am I trying to do in 2026. So as the year winds down, I know we is tired, but before you clock out, I want you to think about yourself. And even actually, you can do this on vacation. I literally am writing this stuff down in the notes app. When I have a minute, I just write down what went well, blah, 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 in my notes app. And I go back and look, and it's right there in your notes app. So as this year winds down, don't just coast. Close it like the wealthy. Reflect, recalibrate, and realign. Because 2026 is not just another year, it's an opportunity to level up. The wealthy don't just stumble into success. They plan for it, they position for it, and they prepare for it, especially at the end of the year. So let's do the same. Let's close this year out like visionaries. Let's plan like investors, and let's move like the wealthy do. That's it for today's What the Wealthy Do episode, and the last episode for this year, 2025. I'm really proud to say this is our 25th episode, and that means we are in the 1% of podcasters, because 90% of podcasters fail after 3 episodes, and then the remaining 90% don't make it to past 21 episodes. So we are at episode 25. I am really excited for this milestone, as well as just being here and community with you all. So if you found this episode to be helpful, please share it with a friend. Otherwise, like, follow, and subscribe where you like to consume your podcast, be it YouTube, Apple, or Spotify. And Happy New Year, everybody. Happy holidays.